Good morning. It's Friday, the 8th of April. We are Signal Centre Talking Ball. I am Joe and I'm joined by Steve and Jamie. Good morning, gentlemen. Steve, you're on mute.
Good morning.
There we
There we
go.
go. Good start.
How are we doing, guys? All right?
Yeah, good, thank you.
We
Yeah,
made it
good,
to the end of
thanks.
another week.
Happy Friday.
Yes,
Getting there.
indeed. Nearly there.
Indeed.
Okay, so let's get stuck into some news, shall we? Let's bring up the latest headlines. So the ECB minutes emphasised the inflation threat yesterday. According to the March meeting, a number of members considered that the inflation pressures demand immediate further steps forward with regards to normalising monetary policy and wanted a clear timetable of when to end bond purchases and also start preparing for higher rates. There was further caution as well over the French elections, which are this weekend. On Sunday, we have the opinion polls indicating at the moment that there's only a narrow lead for the current incumbent President Macron. Caution maintained a reluctance to buy the euro ahead of the weekend, although there will be scope for limited short covering if there is a convincing win for Macron on Sunday. The US labour market remains tight. Initial jobless claims yesterday declined to 166,000 in the latest week, which was well below the consensus forecast of 200,000. So that isn't particularly great. On the back of that, the dollar actually went up to hit a 22-month high. The combination of a hawkish Federal Reserve and notable reservations over the euro continue to underpin the US dollar. With that hitting almost the 100 level, which we'll come on to in a moment on the charts. In terms of what's going on with Russia and Ukraine, markets look as though they are braced for a prolonged conflict in the region. The latest NATO meeting was held on Thursday, and there were further warnings over a prolonged conflict in Ukraine. Very strong expectations that Russia will launch a full-out assault on the Donbas region, and NATO has made commitments to provide more military equipment to the people of Ukraine. In terms of data today, we've got the Canadian jobs data, which is due out later on at 1:30 UK time, which will release its latest employment report. Expected an increase of around 77,000 for the previous month, following the surge of 336,000 last month. And the unemployment rate is also expected to edge slightly lower to 5.4% from 5.5%. That's it for the latest headlines. Let's now take a look at some charts. Anybody want to start off today?
Yeah, I'm happy to start off.
Go for it, mate. What are we looking at?
Well, the interesting thing about gold is an interesting thing. And apart from that, the range this week is just absolutely sort of nothing. Nothing's happened this week in gold. We've had a $30 range, which is really strange for gold. And if we sort of look at this on a weekly chart, we're obviously in this uptrend, this double bottom formation, but we've had this candle of the 7th of March week, which rejected the advances to the all-time highs and corrected lower, forming an evening doji star on the weekly chart. And this has sort of like almost gone sideways since then. That closed that week at $1,918. We're trading at $1,931, only $12-13 higher. So momentum is stalling, obviously, with this this sort of like rest period we're having. Just feel we've got some volatility to come. That's normally when we get ranges closing up like this, it's just before a big event. So not really sure what that is, but it's I really felt like last week the market had a great opportunity to really retest sort of like the buying interest, and it hasn't done it. It's sort of like stayed the same. So I feel a little bit positive towards gold, looking like around about the basically looking at like around about 18, 90, 95 as a good buying area. And really the level to watch on the upside, if we are to break it around about 1966, because that's a good year for England football team. So apart from that, oil also has given up the gains we saw. Things look like they're coming down. Obviously, the news headlines maybe suggest something different. 92.68 on the WTI crude oil is the level to watch. We've seen last week markets pushed lower, and this week it's sort of we've had follow through. We had a retest of $104, and we've given up those gains as well. Looking at the daily chart a bit closer, these are the levels to watch really in WTI crude oil. 92 area, a break of there should open up a nice little move down towards the previous support area, around about $87. And yeah, as I say, $103, $104 on the upside as resistance. Let's take a look at Bitcoin, still under a little bit of pressure after breaking out of this triangle formation. Although yesterday could be seen as a slightly positive day, we did post a green candle, but again, the range was pretty tiny. So looking for more volatility in that, but looks like it's formed a little bit of a base. Don't know if we can see anything on the 4-hour chart. Yeah, we can. We had this previous downward trending resistance line, which now turns into support. So it's a reverse trend line, we can call it. And this looks quite constructive, but again, a little bit triangle type formation. Not the ideal lines to draw. Let's unextend them. Is it unextended a word? I'm not sure. De-extend them, disextend them. Not sure.
I don't
know. This triangle formation, so really looking for a break either way. But for the downside, we need a clear break of the low, 42,740. On the upside, if we can get a break above 43,900, then we should see a little bit of a correction higher. So they are crypto followers. I don't always talk negative. A bit like Joe Rogan. You know, they sort of like one thing from him, and he's hated by the world. Looking at what other market I want to look at. I want to look at the Nasdaq.
Boom,
which has seen a nice little. Sorry, Joe.
Looking good.
Yeah, a nice little sort of uptick. We saw this 4-hour bullish engulfing candle, and now we're sort of pushing higher. So really, if we can manage to get through the 14,650 area, then it really opens up the downside. However, be aware that there'll be resistance there. We could easily have a little bit of a pullback, maybe even looking at forming smaller inverse head and shoulders in here. So ideally, you'd be looking to set longs in front of the support at 14,500 on a short-term basis, looking for it to hit this resistance level at 14,640, and maybe even push higher. Maybe retest this horizontal resistance line now, which was support, now turned into resistance at 14,722. That's about it from me.
Nicely done. Okay, let's take a quick look at FX. It's pretty much all about the dollar at the moment. So this continues to move higher within this bullish channel. We are now posting 7 consecutive up days on the US dollar, assuming today closes in the green, but obviously a long way to go. We're fast approaching this 78.6% fib level at 100 spot 03. Now that is relevant because if we go all the way back to when the pandemic really started kicking off in 2020, we saw these highs on the dollar index of 102.97. Following that, when we saw sort of money move back into riskier assets, we saw a decline in the dollar index, which then finally bottomed out in January 2021. So the 78.6% of that entire move there is fast approaching. We've also got a nice double bottom pattern that played out here, and the measured move of that pattern there was at 100 spot 29. So we are approaching a confluence of levels to consider, and also 100 being a pretty big psychological level as well. So I wouldn't be surprised if we do start to see some cooling off into this kind of zone here on the dollar index. And of course, that's going to have an impact on many other currencies as well. But overall, looks very bullish. We may see some profit taking here or some cooling off, but ultimately, I still think it is likely to head higher. So let's take a look at some of the other currencies that it impacts. Obviously, Euro, US dollar being the main one, still trading in a very large downtrend. No sign of that slowing down. In the reverse of what we've just seen on the dollar index chart, we've got 7 consecutive down days here on the euro versus the dollar. Obviously, we've got a big risk event happening this weekend in the form of the French election. So we could see a pretty strong move either way actually on this come Monday. So likely to be maybe some sort of gap particularly if there's an unexpected outcome. So not sure I'd want to be holding this over the weekend really. But we are fast approaching support here at 108.30 to 108.05. Again, maybe some opportunities to take profit if you've been shorting this into this kind of level here, and maybe clear the decks ahead of the weekend. If we take a look at cable, that has also continued to move lower, having failed a resistance here at 132.07. We're fast approaching these swing lows that we posted around the 15th of March at 1.30000. So a nice big round number to target there as well, which obviously did a job previously and may also do again. So into that kind of level, you may want to consider taking some profit if you're short, or maybe even considering some speculative longs if you are brave enough. Ultimately, still looking for a move down to this 50% Fibonacci retracement level at 128.46 as the ultimate target on that. If we take a look at Aussie versus the US dollar, we can see there was a really strong reversal here at the 75.55 level, and we continue to move lower. We've got some support around here to target, which we may see some buyers step in and do a job, and it continue to trade within this bullish channel. But at the moment, the short-term bias, I think, is on the downside with that, as it is with the New Zealand dollar versus the US dollar. I was looking at this as forming an inverse head and shoulders. We saw a decent break to the upside. We had a really strong move higher here on the 5th of April, but that reversed pretty spectacularly to close lower on the session, and we've since seen prices decline lower. So I'm pretty close to giving up on that as a potential setup, but it may still play out. Who knows? But again, momentum is on the downside with that for now. That's it on the FX front. Jamie, what's going on in the stocks?
Cool. Thank you, Joe. I decided first thing I'm going to do when I look at stocks is kind of look at some of the biggest winners and the biggest losers of the previous day's trading session, just kind of mix things up a bit. So I've only got a relatively short list of stocks here, but I'm going to be adding to them each day. And if we go on change by percentage on TradingView, you can see the biggest loser according to my watch list was Tilray, and I've got it up on the charts here. We had this really positive gap up, which had huge volume, but since then there's been absolutely no follow through. And from the highs it kind of reached of just over $9, what are we doing? US dollars. We're already down 28%. So a lot of these more volatile stocks, they can move so quickly. You've really got to be careful with your risk reward, because 28% is quite a considerable move in about a week and 2 weeks now after today. So Tilray is the biggest loser on my watch list today, and the biggest winner, I actually want to talk about Avacta Group anyway. Is that how you pronounce it? Avacta? I think so. But this is one of those stocks that highlights a lot of the things I like looking for, and that's support and resistance levels being retested. We've got a bit of a downward trending resistance line here. Now, they're not my favorite thing to look at because I think they can be a bit more subjective, and you can kind of see what you want to see with like these, what's the word, kind of angle resistance line rather than a horizontal, which I think can be a bit more clear cut personally. But nevertheless, this downward trending resistance line has just been hit by yesterday's trading, and it's also come right into this previous support level of $100, which again we talked about it the other day as a key psychological level as well. And price is driven right into that and closed just below at $98 yesterday, or it's actually today's open. That's today's open. So we're trading at a really key level right now. I think if we were to get a close kind of above this $100 level, that would be really positive for Avacta bulls. But any kind of close below, and I think we could see a little bit of retracement at least, and it could be the kind of early stages of an inverse head and shoulders. You've got this left shoulder formed here, ahead. If we kind of got a bit of a dip lower and a retest, that would be looking like quite a nice pattern forming, but that hasn't happened as of yet.
In a previous life with that stock, I think when I was a small cap stockbroker, I was selling that when it was just come onto the market, I think, or when it was in its infancy, 2010 maybe. Yeah, you have to go to the weekly charts. I'll look at that.
Yeah, let's go back. Yeah, here we go.
2011,
these levels here.
2010 maybe. Yeah.
Yeah, look at
Still
that.
about the same price.
Yeah, it's kind of chopped
Yeah.
sideways for however long. I had a nice COVID bump and then kind of right back where we started.
Interesting. That's a
yeah.
lovely looking pattern there, though.
Yeah, it's a very interesting level. I think this is definitely one to keep an eye on. We'll jump into Moderna. Why have I highlighted this? Yes, we've got a real nice head and shoulders, I think, form. So this is a weekly chart, but you can kind of see we've got this like quite small left shoulder, this kind of giant head, and then the right shoulder, if we drill down to a daily chart, you can see is kind of just, and I don't draw head and shoulders the same way you guys do because I still don't know how to do that. But you got the left shoulder here highlighted by this big S, got the H for the head, and then the right shoulder is still forming. You can see kind of, it looks like price tried to get through this kind of 185 level, but failed, and it's dropping now down back towards this 120 support zone. So a very key level for Moderna. Moderna's already fallen. I mean, let's get this out because I love seeing these percentage moves. But from top to bottom of this move, it's already down 75%. And with current price, it's down about 68%. So it's really had a fall from grace in the last 6 months or so. And again, this highlights how important it is to have some kind of risk management when you're trading these stocks, because there's a temptation, I think, from retail traders, and certainly in my kind of infancy, being involved in trading. If you were a kind of long Moderna, you'd see this dip, you kind of be maybe a bit worried, like, oh, that's all kind of going down. You see this gap down, you think, oh, it's gonna rally, and you get caught in this loop of kind of hoping it's going to keep rallying, hoping. Before you know it, you're down 70%, and it can happen really, really quickly. So
that
it's
initial
really
rally was obviously fueled by COVID, and then once obviously we developed the vaccines and started to get over the worst of it, then the story sort of died, really, didn't it? And I know they're working on a lot of other treatments, as I'm told by people who are probably emotionally attached to it. There are other things that are going on there, but the sort of main crux of the story and why it got up to those levels in the first place was obviously a lot to do with COVID. So
is that the sort of story like, I bought it at 500 and they've just found a cure for cancer?
Yeah,
so
something like that.
I should be able to get out for flat at some point, surely.
Yeah, there will be a lot of people that are holding it up there.
Yeah, I'm sure there's still a lot of people holding it now. And to me, the big warning signs were here. We've obviously had this really, as you highlighted, Joe, we had this big run up due to the vaccine. And I mean, all these kind of really good bull runs, they all do come to an end eventually in some form. They have that big sell off. But the key warning signs for me are the big red volume days, because that to me shows, and you maybe correct me if I'm wrong here, but it shows that the big players in Moderna was deciding actually it's time to start dumping our position. And when the big players start getting out, it's always a bit of a,
and look at the gaps on the chart as well there when it happened.
Yeah, that's the other thing. There's a lot of gaps. I mean, the warning signs are here right from the first kind of gaps were back in September, another one in October. It kept on happening, and I can see how people might have got sucked in if we kind of draw the chart here to this rally here where it started gapping up quite hard. You think, oh, happy days, we're back in business. But no, there was no volume to this at all. So it was, from my perspective, it looks like the retail crew was kind of buying that up. There was no big players investing in that at that point. And yeah, it's just absolutely capitulated back down to these levels. So be very careful when you're trading these stocks and make sure you've got the appropriate risk management. So yeah, so you're protected from these big downside moves. But I think we'll leave it there. I'll just quickly look at Novavax again. Novavax
just talking about your winners now, aren't you, Jamie? Come on.
I don't think we even got in on this because you had a look at this retest of this key level here. We can change this. I highlight resistance level as this kind of red bar. But we looked at this on the stream earlier this week, and when we had this descending triangle continuation, we had the break on good volume, and since then it doesn't look like a lot, these two candles, but percentage terms, if we take the bottom of this candle where we kind of spotted the break, I mean, it was down at one point just under 13% in 2 days. So it's quite significant percentage sell-off. But on the chart, you kind of think, oh, that's two quite small red candles. But this is a logarithmic chart, so it shows moves in percentage terms, which can always look a little bit different to. Actually, I'll just quickly highlight that because it can look very different. I'll zoom out the weekly. I think that might show a bit better. But if we change to a There you go. So this is not a logarithm. Is it arithmetic?
Yeah.
Chart. So this shows each price move. I'm probably going to define this wrong. Maybe you guys are better at jumping in because I know what it means. I don't know if I've got the best definition for it.
Yeah, so they've got, as you can see on the right-hand side, they've got increments of 20 that it's going up by. Whereas the log scale will show it as a percentage, which I always prefer to use a log scale chart.
Yeah, no, I'm the same. But I think for those people who maybe just started charting or are new to it, you might be looking at Novavax and have a chart like this and think, why does it look so different to the ones we're looking at on the stream? But it's purely because this is an arithmetic chart and it shows the price as like a fixed scale, which is quite interesting because you can really see how much the price runs up on an arithmetic chart, I think. But then I like Joe, I prefer looking at these kind of percentage moves as a personal preference. But yeah, we'll leave it on the stocks there today, but be careful. Risk management is important. That's all I've got.
Nice one, Jamie. Superb. Okay, so gun to the head trades. Every day, all three of us, this is where we come up with 3 ideas on the video. We all have to pick a trade live on the video. Each idea must have a stop and a target. All the ideas are placed at market, and from now on we'll be publishing these on our TradingView account as well, with a little bit of blurb as to why we've come up with these ideas. Each day we expire these ideas at 9 p.m. UK time, or when the stop or the target is hit, and we maintain a spreadsheet of performance just to see how things would have played out. So just a quick recap on yesterday's ideas. We did, they're all available on TradingView, so you'll be able to see those. But let's bring the spreadsheet up. I went short of Euro New Zealand dollar, which was stopped out. Steve went short of DAX, which was stopped out, but Jamie went long of the Swiss 20 market and made 0.97R on the session. So well done to you, Jamie. Nice solid win on that. So since we began, we've got a pretty rich history of doing this. All of the backlog of our videos are on our YouTube channel. Jamie's fairly new to the setup. And got a pretty spectacular win rate already, up at 66.7%. So that's very nice indeed. Us old boys sort of settled in around 40% on these calls. So obviously do be careful if you're following them. They are speculative and we're coming up with them on the fly pretty much. But using appropriate risk management, we always have a 2-to-1 risk reward ratio on all of these trades. Even with low win rates, Steve and I are still maintaining positive performance over the long term. So it is possible, but again, reiterating what Jamie's mentioned a couple of times already, that risk management really is the key to all of this. So Jamie, you were the only winner yesterday, so I'm going to give you the honor of coming up with a fresh idea today. What have you got for us?
Thank you very much. Yeah, so there's a couple of things I've been looking at. I've been looking at the FTSE. We had this kind of nice breakout from this 7620 level, but because I've got to kind of take the trade at market, it's kind of getting away from me a bit. I might come back to it. I kind of been put it on the spot here. I think what I'll go to today is I'm going to attempt to short the pound against the US dollar. We've had this nice breakthrough of this what was support level but now becomes resistance. And although for the short term this doji style candle here could indicate some buying pressure, and we're kind of having that right now. As you can see in the last 10 minutes, we've had a bit of it's been bought back up, but that kind of takes me into this retest level, which I thought gives me a good kind of risk to reward area. So we're going to try selling that there, and I think we'll take it all the way down to these. How's that looking? It's kind of just a small one. I think we're going to go for a 2-to-1 today, which isn't actually, look at that, while I thought the price goes higher. We'll call it this level. So just to confirm, this is a short at 1.3051. We'll take profit at 1.3002, and my stop will be 1.3074. So this is a 2.13 risk reward ratio. I still can't say that, but that's what I'm doing. It's going the wrong way. Don't get stopped out live. That'd be embarrassing. Yeah, so that's what I'm going to go for.
Nice one.
Right, who do you want to go for next? Me or you?
I don't mind. I'll go.
I said it first. Right, I'm going to look at Bitcoin this morning, and just talking about this triangle formation on the chart now, it's looking like it's breaking up to the upside. So for everyone out there who thinks I never like Bitcoin, I'm going to buy this and keep quite a tight stop. It's going to be, let's see how that looks. That's what I'm going for. It's a 3-to-1 risk reward. I love the threes. We got the entry level at 43,847 just now. The target's 45,347 and the stop is at 43,347. That's what I'm going for on Bitcoin. Just really breaking out the triangle formation, and also, well, I mean, it shows it a little bit better on this chart here, but yeah, triangle formation, a little bit of a bottom put in, a few bullish engulfing candles, and the potential for a reversal here after yesterday's candle. So I'll hand it over to Joe.
Thanks very much. I'm going to take a look at the dollar index today, and it is super speculative. As I said, all these trades tend to be. Let's get my chart up. So this is the hourly chart on the dollar index, and in fact, let me just take this back to the daily just so we know what we're looking at here. So as you know, I've been talking about dollar index moving higher within this bullish channel, but what I'm most interested in is the fact that this is close to the 100 level, or the 78.6% fib level, or the top of the bullish channel. So there's a lot going on here at the minute, and I think that 100 level is going to be very important as a psychological level. We've seen a little bit of red on this candle now, following a gap higher this morning. So I think there could be some opportunity here for a speculative short. Now, this is the hourly chart. Trading in a nice bullish channel, this latest move higher that we've seen play out over the last week or so, and we seem to be stalling just in front of this 100 mark. So I'm going to sell it now at 99.80. I'm going to target a pullback to the 38.2% fib level at 99.08. I've got here actually of this move higher, and I'm going to put a stop loss above the highs of today at 100.035. So looking for 3.15 R on that one today, fading into that $100 level on the dollar index. So we'll see how that plays out.
Nice one.
Okay, so day ahead, we've got the Canadian employment report due out 1:30 UK time. That's the only piece of high impact data that we have out for today to finish the week. As mentioned over the weekend, we've got these French elections, which could have a fairly significant impact on the price of the euro or anything linked to euro over the weekend. So do be careful. Could be some pretty strong moves on the open on Monday. If you carry anything over the weekend, then you need to be aware of that. And obviously factor in those risks. Next week, we've got a fair bit of data out, particularly inflation data that is of interest in the US and the UK on the 12th and 13th. We've got central bank action from the Bank of Canada, and we've also got an ECB policy meeting as well on the 14th of April. I think that's it from us, gents, unless you've got anything further to add.
No, nothing further to add. Actually, yeah, no, there was one chart I wanted to show, but I'll show it tomorrow. I'll show it on Monday. It's a long-term chart on the bund that we highlighted, head and shoulders formation. It just hit its target, so I just wanted to. I'll go over that Monday.
Okay, cool.
Sorry, Joe. We've got.
Sorry, go on,
yes,
Jamie,
sorry. I was just going to point out there was a comment, but do you want to take it?
Yeah, sure. So we've had a comment from Athar on YouTube. He's using our trade ideas on IG and loving it, which is great to hear. So when we publish our trades on a variety of brokerage platforms, they do come with a confidence score. Now, the confidence score takes into account a number of different factors. We primarily focus on trend. So we look for the trend across the short, medium, and long term. So if they are all in line with the direction that we're either buying or selling, then that will improve the confidence score overall. We also take into account new sentiment, which we've mentioned a few times on our trade ideas in the morning. And Steve's gone through the platform there. So we take that into account as well. What is the current sentiment towards these assets? And finally, we take into account the performance of the analysts of these particular trade ideas as well. So if you get a full confidence That means we're trading with the trend. The new sentiment is favorable in the direction of the trade, and the recent performance has also been very good. Now, that doesn't necessarily mean they're going to be winning trades. Everything is treated equal effectively, but we're just using previous data to try and give us a bit more confidence potentially. But markets reverse or go in opposite directions to what we expect all the time. So I wouldn't really treat anything any different particularly, but it's just a bit of a guide more than anything else. You happy with that explanation, gents?
Yeah, absolutely.
Yeah,
Well done,
nailed it.
Joe.
We've also had a question about our trade ideas on shares. So we only share, I think, FX, commodities and indices with IG Markets. There are a couple of other brokers out there that take single stock ideas as well. If you want IG to take single stock ideas, then maybe get on the phone to them and let them know, because that would do us a favour. But yeah, there are a couple of companies out there that are doing it. I think Equity are taking trade ideas. Are they, Steve, from single stocks?
Yeah, there's loads, Joe. There's
Blueberry
loads. There's too many
Markets.
too many to mention.
Okay. Yeah, okay, hopefully that helps anyway. But yeah, any more questions for anybody watching, please feel free to fire them over. You can join us on Discord as well, where we'll be a lot more responsive. And yeah, hopefully you all have a very good weekend.
Lovely. Cheers.
Nice one. Thanks, everyone.
Have a good one, guys. Goodbye.